Welcome to the weekly wrap-up where we take a look at what economic events were moving and shaking the market this week. Today I'm joined on the line by Merina Willemse, economist at Efficient Group. Hello Merina. So China's economy has slowed for a seventh quarter to 7.4% as problems in Europe and the US hurt demand for its goods. What are your thoughts on this?
Well, the expansion in growth that we saw in China this week was expected by the market. So I think it was something that definitely came in line with our thoughts and our projections, which gives us hope for our estimates going ahead. Nevertheless, this is still very slower, much slower growth for China. And despite the slowdown in demand, China is still managing to get economic growth levels that most other countries in the world are not getting. So we can either see this in a positive light or in a negative light. I think for now we can take recognition of the fact that exports are slowing down. But this, in the global context, you can still see the 7.4% growth as positive growth, growth that could still support other economic regions and other emerging markets.
The UK unemployment rate now stands at 7.9%, and the number of Britons claiming unemployment benefits fell unexpectedly by 4,000 in September, official data showed this week. What do you make of this data?
Well, it's obviously a positive number. Our expectation in South Africa for the unemployment rate of the UK was estimated at around 8%, so it's already below our estimates. This economy is also, from our side, expected to contract this year, so it's not really, this number doesn't really mean, I think, that the UK economy is out of the woods yet. I would definitely keep my eye on this and would be surprised to see the number fall much more drastically going on through next year. In the current economic climate for most of Europe, and then we know that we're not sure what might happen in the American economy and the demand that might be created from outside economies. And in this global context, our estimates for the UK going forward onto next year might be slightly better, but we're probably going to see numbers remaining unsatisfactory for a while.
And US advanced retail sales moved up to 1.1%. There are indicators that strong iPhone 5 sales boosted these figures. Do you think US advanced sales will continue on this trend?
Well, once again, we were surprised to see retail sales improving. We have seen this kind of move just in retail sales after huge monetary policy stimulus projects being implemented in the US economy. So I think perhaps it moved in line with seasonal things like the release of the iPhone could have impacted. But I noted from some of the reports that the stimulus within retail came from several sectors. So you can't really blame it on the iPhone 5 sales alone. I think that in general, there might be a little bit of an uptick on the sentiment level, even if it's on the consumer sentiment level, that supports retail sales in the American economy. Also, we know for a fact that they've got very loose monetary policy estimated for the next 2 years in America, and this gives the local consumer a little bit of confidence and a little bit of spending power, despite that economy and that consumer still being in a very stretched state, a very worried state. And I think that we might see a little bit of a boost on the retail front, and if we do see the stimulus packages resulting in the fashion that we know the monetary policy authorities in America intended to, that we could see a further improvement in retail sales as the year goes on.
In terms of economical data releases this week, what would you say have been the highs and lows?
Well, I think the fact that we as analysts and economists have sort of got it right this week might be considered as a high. We've been bombarded with uncertainty to such a large extent, and markets have reacted when numbers come in, and we've underestimated what kind of effect the economic factors are having on markets. And that is not seen this week. So in that light, I want to say, even though we know things like the Chinese economy is going slower, at least we're getting it right for a change. I think the lower point is that on the market side at least, the market really expected Spain to come to the forefront and ask for that bailout that everybody was expecting from the ECB. And Spain did not do that. And I know that at this time it's probably a perception that is created in the market. Spain's bond yields have returned or have lowered a little bit in the last few weeks or days. And this has actually supported Spain in a way that they can slightly afford their debt a little bit better and might be a reason for not applying for the bailout yet. But I do see that this might cause a trend going ahead next week, where markets again expect Spain to come to the ECB and at last ask for this bailout. Until then, as long as Spain disappoints the market, we're going to see days like today where the market turns red. But I think the timing really plays an important role, and the time for Spain will eventually run out, and they will have to make a decision to come to the market. And this will once again result in perhaps, at least on the short term, in green days for the market.
Thanks, Merina, for discussing this week's events. Now, before we end today's weekly wrap-up, let's have a look at what some of our experts around the globe had to say. Rowena Harris-Doherty spoke to Sanjay Mathur, Head of Economics Research for Non-Japan Asia at RBS in Singapore, who talked about Asian FX. He said, this challenging global environment is likely to continue. In Asia, growth is weaker, but at this stage doesn't warrant some kind of depreciation of Asian currencies for us to expect that central banks within the region will be willing to weaken their currencies to support exports. It's still quite distant right now. Manuel Maleki, senior economist for ING in Brussels, spoke to Durham McDermott, who said it's going to be political events, not economic data, affecting the markets going forward. And finally, Jennifer Cordonley spoke to Faye Schaffer, commodity analyst at Affinity Trading Corp, who said now is the time to invest in soft commodities such as cotton. And that brings today's weekly wrap-up to an end. Keep up to date with the latest economic and forex news from the Dukascopy TV team. Have a good weekend.